Level 1, the broke recruit. It starts with a notification at 2:13 a.m. Available balance, $43.17. You stare at the screen while the apartment hums around you. The refrigerator rattles. A siren passes somewhere below. Rent is due in 6 days. Your student loan payment hits in 9. You are 22 years old, working 48 hours a week for $18 an hour, and you already understand a dangerous truth. Effort is not the same thing as leverage. The next morning, you skip coffee and walk into a networking event held in the back room of a downtown hotel. Everyone wears the same expression: hungry, tired, pretending not to be either. A man in a charcoal suit shakes your hand. What do? You start to explain your job. No, he says. What value can you create? That question becomes the door. Within 3 months, you take on freelance work after your shift ends. You build spreadsheets for small businesses. You clean up bookkeeping records. You earn an extra $700 a month, then $1,200, then $2,000. You stop buying lunch, stop going out, stop answering some friends. The first hidden rule reveals itself. Level 1 rule. Learn early. The system doesn't reward hard workers. It rewards people who become useful. At night, you open investment accounts with amounts that feel almost insulting. $50 into an index fund, $50, $25 into a retirement account, $25, $100 into a high-yield savings account. $100. The numbers are small. The habit is not. When your coworkers spend their overtime pay on new phones, you buy a used laptop for $480 and teach yourself financial modeling from free online courses. You feel disciplined. You also feel alone. That is the entry fee. Level 2, proving your usefulness. By 24, your net worth reaches $18,000. It is not enough to impress anyone. It is enough to change how you think. You no longer see money as something you earn. You see it as something that can be deployed. The man in the charcoal suit calls again. I have a client with a cash flow problem. Can you build a forecast by Monday? It is Friday evening. You say yes. You work through the weekend. 43 tabs open. Energy drinks stacked beside the keyboard. By Monday morning, the model is ready. The client saves a warehouse contract worth $220,000. You get paid $3,500. More important, your name starts circulating. Useful, reliable, doesn't complain. You begin hearing conversations that used to happen after you left the room. Real estate deals, tax strategies, equity splits, debt structures. The second rule emerges, Level 2 rule. Earn access. Access is earned through competence, not charisma. You buy your first investment property, a 1-bedroom condo on the edge of the city. Purchase price, $142,000. Down payment, $7,100. Everyone tells you it is risky. They are right. The tenant stops paying after 4 months. The HVAC system fails in winter. You spend $4,800 you do not want to spend. For the first time, you understand that assets can become liabilities overnight. But you keep the property, and something changes. You stop thinking like an employee. You start thinking like someone responsible for outcomes. Level 3, the trusted participant. At 26, your income exceeds $120,000. Your net worth crosses $100,000. The number feels unreal. So does the invitation. You are asked to join a private investment group that meets once a month in a law office after business hours. 8 people. No presentations, no marketing, just deals. You are the youngest person in the room by nearly a decade. The senior partner slides a folder toward you. Review the acquisition assumptions. The property is a 32-unit apartment building. Purchase price, $4.8 million. You spend 3 days analyzing every line item. On the 4th day, you find a maintenance reserve error that would have understated annual expenses by $73,000. The room goes quiet when you explain it. Then the senior partner nods. Good catch. 2 words. Enough to move you from outsider to participant. You begin receiving opportunities before they become public. Off-market properties, private lending arrangements, equity stakes in small businesses, tax-advantaged partnerships. Your wealth compounds faster. So does your reputation. The third rule becomes clear. Level 3, Rule Guard Trust. Trust is more valuable than money. Once you lose it, the doors close quietly. You start declining invitations from old friends who still treat money as a monthly event instead of a long-term strategy. They notice. One of them says you have changed. You tell yourself he is wrong. But when he talks about weekend plans, you calculate opportunity cost automatically. The system is already rewriting your instincts. Level 4, the skilled operator. By 28, you control over $500,000 in assets. Not all of it is yours. That is the point. You learn that sophisticated wealth is rarely built with personal cash alone. It is built with debt, partnerships, and other people's confidence. You refinance 2 properties and acquire a third. You negotiate a seller finance deal that requires only 5% down. You move $60,000 through 3 separate accounts before noon to close a transaction. The paperwork is legal. The complexity is intentional. You now understand the 4th rule, Level 4. Rule, use leverage. Leverage amplifies everything. Skill creates wealth. Leverage multiplies it. It also multiplies mistakes. A retail tenant defaults during an economic slowdown. Your cash flow drops by $8,400 a month. You spend nights reviewing spreadsheets instead of sleeping. For the first time, you feel genuine fear. Not fear of being poor, fear of losing momentum. That fear makes you sharper. You renegotiate contracts, cut expenses, secure a replacement tenant before the vacancy becomes public knowledge. The crisis passes. People call you resilient. They do not see the panic hidden behind the calm voice on the phone. You are becoming dangerous because you can operate under pressure. Level 5, the respected Insider 30, arrives quietly. Your net worth approaches $1.8 million. More importantly, people start bringing you opportunities instead of the other way around. A restaurant owner needs bridge financing. A developer needs a capital partner. A startup founder wants strategic advice. You become selective. Selection is power. You lend $150,000 at 11% interest secured by commercial real estate. You acquire a minority stake in a logistics company. You join the board of a regional property management firm. Your calendar fills with meetings that begin with handshakes and end with non-disclosure agreements. The 5th rule reveals itself. Level 5. Rule, protect reputation. Reputation becomes collateral. People invest because your name is attached. That realization changes your behavior. You stop posting about success. You stop discussing numbers casually. You stop trusting everyone who smiles. At a dinner meeting, a developer proposes a structure that would hide income through inflated contractor invoices. The profit would be substantial. So would the risk. You decline. Not because you have become moral, because you understand that one compromised deal can poison 20 future ones. The system has taught you a new form of discipline. You notice something else. Your parents ask fewer questions about your finances. Friends assume you are busy. Relationships become negotiations about time. Wealth is giving you influence. It is also taking pieces of your old life without asking permission. Level 6, the authority figure. At 33, employees report to you. Property managers call you before making decisions. Accountants wait for your approval. Contractors compete for your business. You sign payroll for 42 people. The total is $96,000 every 2 weeks. The 6th rule arrives with uncomfortable clarity. Level 6 rule. Carry consequences. Authority means absorbing consequences. When things go wrong, the responsibility flows upward. A construction project runs $380,000 over budget. Investors want answers. The project manager blames supply chains. The contractor blames design changes. The architect blames permitting delays. Everyone protects themselves. You sit at the head of the table and realize that leadership is often the art of being blamed professionally. You restructure the financing, inject additional capital, and salvage the project. The investors stay. Your credibility increases. So does the weight on your shoulders. You begin waking up at 4:30 a.m. to review reports before anyone else is awake. Your phone never truly stops vibrating. People think you have freedom. In reality, dozens of families now depend on decisions you make while staring at spreadsheets in the dark. You are no longer building wealth only for yourself. You are maintaining a machine. Level 7, the strategic power broker. By 36, your net worth exceeds $8 million. The number is almost irrelevant. Your real asset is influence. You can introduce lenders to developers, developers to politicians, politicians to donors, donors to projects. You no longer move money. You move relationships. A city redevelopment proposal stalls because two competing groups cannot agree on terms. You arrange a private dinner at a steakhouse after hours. 4 people attend. No assistants, no notes. By midnight, a $47 million partnership is formed. You receive a small equity position for making the introduction. The 7th rule is the most dangerous. Level 7 rule. Control flows. The highest levels run on information and access. Money follows both. You start hearing things before they happen. Zoning changes, interest rate expectations, corporate relocations, infrastructure contracts. People seek your opinion because they believe you can see around corners. Sometimes you can. Sometimes you are simply connected to the people turning the corner first. The moral compromises become subtler. You support projects that displace neighborhoods because the returns are extraordinary. You justify it as economic development. You tell yourself someone else would do it anyway. The rationalizations come easier now. That should concern you. It barely does. Level 8, the architect. The penthouse is silent except for the ice settling in a glass. 41 stories above the city, you watch headlights move through streets you partially own. Your net worth passes $50 million. People call you successful. They do not understand the architecture of the system. At this level, wealth becomes abstraction. Properties are held through holding companies owned by trusts, managed by attorneys. Investments spread across private equity funds, municipal bonds, industrial warehouses, data centers, and businesses that generate cash whether you pay attention or not. Your calendar contains fewer meetings. The meetings that remain are closed-door conversations with bankers, fund managers, and elected officials. The final rule has been waiting for you all along, Level 8 rule. The hidden cost. Ultimate power purchases control at the expense of belonging. The higher you rise, the fewer people can understand the decisions you make. You think about the apartment with the rattling refrigerator, about the $43.17 balance, about the panic that once came from being unable to pay rent. That fear is gone. In its place is a quieter one. You wonder which relationships were genuine and which were attracted by gravity. You wonder whether ambition built your life or simply occupied it before anyone else could. Your phone lights up with a message from a young analyst asking for 15 minutes of advice. You recognize the tone immediately. Hungry, impatient, convinced that wealth is the destination. You almost ignore it. Then you remember the man in the charcoal suit. You type a single sentence. Tomorrow at 7 a.m., bring a notebook. Across the city, a 22-year-old sets an alarm and feels certain that everything is about to begin. He thinks the system is about money. He thinks freedom grows with every dollar. He thinks wealth is a ladder. He does not yet understand that it is a hierarchy. Level by level, deal by deal, compromise by compromise. Somewhere between the first investment and the final boardroom, the person who started the climb disappears so gradually that no one notices, not even him. At 2:13 a.m., his phone buzzes with a bank balance that makes his stomach tighten. He stares at the screen, already searching for a way out. You know exactly what that feels like. You also know what it costs. But he will shake the hand. He will say yes, and the system will open the door for him, the same way it once opened the door for you.